righty traders. Hey, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to ask you guys this. How many of you are short the Aussie dollar? Anybody short the Aussie out there? Bueller. Okay, just letting you know, I took half of my position off just now for like 35 pips on my average. So just letting you guys know, for those of you that are not in the chat room, just kind of cluing you guys in what I'm up to. Okay. All right. Very good. Okay, so let me see here. 1 second. Okay. Just grabbing my bias chart, and then we're going to get started. Hope everybody's having a good morning. It's like, man, it's so slow, but just like if you, where's my glasses? Sorry, just making some adjustments here. I had updated my drivers for my computer. And so what happens when you update your drivers, when you have multiple monitors, and it's like, some NVIDIA, GeForce gaming driver, because that's the video cards you use when you have like these multiple monitors. It jumbles up my monitors. So I have a hard time, like after doing it, every time it updates, which is probably once every, like, I don't know, 6 months or so, I have some sort of update that I have to do, right? So whenever I do that, it jumbles up all my monitors and I can't find anything. Like, when you have your computer and you guys are, you're used to your technology and all this stuff is in a, Tom said, yep, yesterday. Yeah. Oh, I don't know if we were talking about the Aussie or whatever, but anyway, so whenever you're using technology and you're very comfortable with everything being where it's at, and then it gets, thrown around in different places and you have to spend some time like figuring it all out. That's the story of my life the last couple of days, just trying to figure it out, trying to figure out where all my programs are at, whatever. Anyway, okay, enough about that. Let's talk about the market. So the euro, obviously we have not been able to clear 117.50. I mean, this is easy today. Today's analysis is going to be easy. 117.50. Good, just because nothing's happening. But these are both really, really important. And I have to say that while we're below 17.50, we have to stay bearish in the euro. You have to be. I mean, yesterday. So yesterday's data, I think when the CPI data came out, everybody was bearish the euro or long the dollar, right? So then the data came out. People were like, okay, yeah, that data is not going to be the data that breaks us below 117. So they covered, right? And then you got people covering yesterday. I think what happened today was you had a bunch of people that were playing the euro dollar to the long side, short dollars, expecting the PPI to be a little weaker and the euro to squeeze. And then what happened? The PPI came in stronger. As Steve had mentioned earlier, producer prices are going to continue to stay strong, or, keep the downside pressure on, or keep the upside, pressure on inflation. Then, and then you got the euro, moving lower after that data. So, I mean, I think a lot of people are probably positioned for dollar weakness. They didn't get it. They're getting out this morning. Bottom line is we just need to break below 117 or above 117.50. So If you guys don't have any euro exposure, which I don't right now. I'm long some US dollar, Norwegian krona from earlier this morning. So basically, I'm short the euro. I mean, that's a way you could look at it. But if you don't have any euro exposure, I don't think right now is the time to have any euro exposure. It's real simple. Above here you get long, below here you get short, and probably carefully until you get a sustained break one direction or the other. This is a perfect day for those of you guys that trade the euro. This is a great day to go rearrange your sock drawer. You know what I'm going to do later today? Like, if nothing happens, you know what I'm going to do later today? Like, when I say later today, I'm talking within the next 2 or 3 hours. You know what I'm going to do? I'm actually going to go into my closet. Since we're gonna summer's getting towards the end of summer, and I'm gonna be heading into the winter months. For us, it's winter months is that I get to wear sweatshirts again for the next 6 months. That's it. I'm going to go remove some clothes that need to be donated tomorrow or today. If things stay like this, I'm just not going to stick around, because if I don't do that, then I'm going to get sucked into trading, right? And that's, I'm never far away from my computer, and I'm never far away, because what happens is I actually will go into my closet. I'll start removing clothes, and I have all my quotes running right next to me anyway. So on my phone. So I know exactly where everything's at, So anyway, 139, 138. That's the flag. We talked a lot about this at the on the FA.C.E webinar. We're still in range. I can't get bullish until we get above this flag resistance. And as I was drawing out for you, it looks like we might actually just end up doing some sort of inverted head and shoulder pattern, because if the euro breaks 117, it will drag down the sterling. You guys know that, right? Like, it's going to happen. It's going to happen. So the euro breaks to 117, the sterling's probably going to trade back down. I would even venture to guess below this. Oops, didn't want to do that. Below this support, to be honest. I'm going to get rid of that, but I think it will. I think we'll probably trade back down towards 137. Ozzy. Do you notice that Ozzy held the 618 retracement? So I had orders overnight to sell more Aussie dollars if we got above 74 cents. We obviously didn't do that last night. So 73.85 and then 74.20 is key, right? While we stay below that, we stay bearish. You guys know that I think those are the levels we wrote down yesterday, right? Yeah, 73.85, 74.20. And yesterday, just so you guys know, we hung around this 73.80 level. My average is 73.80 from shorting it yesterday. So you guys had all the time in the world yesterday to short the Aussie. All the time in the world. Support is going to be right here, 73.20. Below that is 72.90, 73.20, right? This is the 161% extension. Big support right here, 72. I want to say 72.80, 70. What was the low there? 72.89. Yep. Kiwi. Well, Maybe, possibly, something like that. It'll look something like that, I think. But I mean, there's nothing to do with the Kiwi right now. Do we have data tonight? Sorry, I'm just looking. We do. We have New Zealand visitor arrivals, which is always the biggest data of the year for New Zealand. I'm joking. I'm joking.
You're not funny, man. You're really not funny.
I know. I'm tired. I'm not funny. By the way, it was storming so bad last night, and I actually, when it felt like lightning hit right next to my house.
Wow.
I mean, it was like boom, the boom, right? And it was, the light was immediate. Boom, okay. And I literally fell out of my bed. It couldn't have been more than 100 meters away from where
really.
Yeah, I mean, I don't know where it hit, but man, it was close, and it was so loud. I mean, it sounded like it was like,
man, so many things there. The heat, the scorpions. Why do you want to live there?
Zeus is pissed, man. We do have scorpions. We do. Yep. The funny thing is it is just really, we get the 9 months out of the year or 8 months out of the year where it's just the most beautiful place in the world to live. So, we have to deal with our summers. Right now, it's what we call the monsoon season.
Yeah.
And so it's the time of the year where we get a lot of rain for a desert. And we're getting more rain this year than we normally do, which is really good. 618 retracement is going to be 69.50.60. That I still think this is going to be important today. So even if we broke this trend line where, if this doesn't hold, we're not going very far. I doubt it. So I'm going to write down 69.60. We are smack dab in the middle of this range. So you guys can have fun trading the Canadian right now. 126, 124.25. Same numbers as yesterday. Okay. I was trying to buy the Swiss overnight. I had bids down here at 91.80. I was trying to get long. My order will expire later today, but I still wouldn't mind getting long down here. And 91.70. Yeah, we break above 92.40, then we should trade up to 92.75 pretty quick. So I'm going to write down both 92.40, 92.75. And I think we're in a range. I happen to be bullish right now, but I think we're in a range. If you guys are not in the chat room, you don't know this, I bought the US dollar Norwegian krona at 884 this morning, just slightly below where we're at. 618 retracement comes in at 880 or 881. Obviously, while above 870, I am bullish. So I'll do this 870, 881. And resistance is 895, 896 actually, but 896. And we're bullish while it's above 870. Dollar MEX. We have Banxico today. We just hit the 618 retracement of this move, but I'm not going to write anything down. But $19.80 resistance today should be back at 20. So you can actually write something like this: 1970. Okay, by the way, Banxico is going to meet today. They are expected to actually raise rates today. So the risk is just like the risk last month. Well, first of all, last month they weren't expected to raise rates. Then they raised rates. So now people believe that Banxico is on a rate hike regime, if you will. The risk is that they could say, well, we hiked last meeting to kind of get ahead of the curve. So, growth is slowed, inflation is, moderate, whatever their excuses are, and they could keep rates unchanged. And if they do, that dollar Mexican peso will go a lot higher. So resistance will be 20. Oh, shoot, I didn't want to do that. Damn it. Sorry. 1970, 1980. Resistance 20, 20, 25. But also keep in mind that the 200-day moving average is right here, is at 2013. So remember that capped us 2 days ago. If you go back and read the analysis, dollar nearing the 200-day moving average, key resistance 2025 to the 200-day moving average is at 2013 today, and it seems to be capping the rally near term. So we very well aware of this 200-day moving average. Just keep it on the radar if you guys are, meaning let's say the dollar Mexican peso rallies today and you get sucked into the trade because you're like, oh, I'm going to get long, but just keep in mind that the 200-day moving average is up here. So if you're trading it on the long side above 20, just start going, oh, remember Blake was talking about that 200-day moving average coming up. All right. Okay. The dollar yen. Citi shorted dollar yen yesterday, just so you guys know. So resistance right now, let's go back to it. Let's go to a 4-hour. So resistance is going to be this little spike high. Will be 110.80, 110.80. I think personally, any dip back down to 1980 would be very well supported. And I'm going to just do this really quick just to see. So the 50% retracement would be 109.77, but the 38% retracement also coincides with this hourly or 4-hour, but it's an hourly spike low, which will be 110. So we might not ever, I say might not ever, within the next day or two, I don't think we might actually just hold 110. So unless yields completely crap the bed. Man, look at this Ozzy. Unbelievable. Okay. Dollar index. A lot of, how many people asked me yesterday? Um, oh, okay. Somebody just said that I heard this morning Goldman is buying dollar yen. You know, it's interesting. I think the dollar yen is the hardest to read currency pair right now. I really have a hard time buying. So it doesn't surprise me that Citi's on the short side, Goldman's on the long side. I think it's probably like one of the, the most unpredictable currencies. So anyway, but you also have to imagine Goldman is also always long risk. Always. It's like, it's Goldman is like the ultimate realtor. Have you ever met a realtor that says the housing market is crashing? Aside from like,
or a central bank that says we're going to have a recession.
Right. Yeah. I mean,
yeah, that's an even better example.
Goldman is like the ultimate market cheerleader, you know, and you know,
well, in the long run, they're right.
Yeah, of course. Yeah.
Yeah. In the long run, we're all dead anyway, but yeah.
Yeah, in the long run, we are all dead. So correct. God, you're so morbid. But I do think that I got a lot of people asking me about a double top in the dollar yesterday. A lot of like random people just, is that a double top in the dollar? Like, if you think it's a double top, then go ahead and get short, put your stop above there, because double tops build stops. That's what they do. So it's not a double top until you break below the support. All it is just resistance. And what we are probably building more than anything is a bullish wedge that'll eventually break out. That's probably what's happening right there. So, you know, give me a good reason to start shorting the dollar index, and I'll start thinking maybe it's a double top. 93.20 is resistance.
I can give you many good reasons.
Well, yeah, I mean, but you know,
literally good reasons.
It's
economically sound reasons.
It's still the least dirty shirt in the dirty shirt pile.
Why?
38% retracement, because look at every other central bank's balance sheet. It's expanding more. Go find it right now, because I'm trying to finish up analysis. Go give me a current chart of every central bank and how much their balance sheets have expanded relative to the Fed.
Yeah, okay. That's not the only thing that counts, though. And still, I'll find you many better, even if that was the only criterion.
Steve, are you okay? So let me ask you this, because you've been a dollar bear since the euro was at, you know, in the 120s. So are you a dollar bear right now?
Give me a time horizon so I can answer the question correctly.
I'm talking like near term. We're traders. I want to know what I'm going to do right now.
No, in near term, for the time being, you know, no, I'm neutral where we currently are.
Shit. Because as a trader, I'm bullish the dollar right now. And
yeah, the dollar can easily.
As I explained to you before, I think that hey, stocks are probably going to go higher. The dollar is going to weaken over time, and you know, we're going to probably see higher prices in the euro, and we're going to see weaker prices in the dollar. I think the dollar,
I agree with that,
being used in central, and people are moving away from the dollar as being the as the reserve currency. But I will also say this, and these conversations always happen right at the cusp of the market completely crapping the bed, as it did in 2008, as it did in 2000. And everybody goes, oh, I'm so bearish the dollar. Oh, the dollar's a piece of garbage. Oh, we're going to, look at everybody's moving away from dollars. And then we have a financial crisis. Then the dollar goes berserko. And then no one's bearish the dollar anymore because the dollar goes from 93, where it's at right now, to 105, and it shoves that dollar thesis right up of everybody's butt when push comes to shove and we have a crisis. So, is the dollar the best reserve currency we have right now? Yeah, it is. And until that changes somehow, we're at an area where stocks have doubled in the last 12
15 months.
Yeah. So if we have any type of substantial 20% pullback, people are going to crap their pants and buy dollars. And so,
oh yeah, for sure, temporary.
So you can go ahead and stand in front of that. I dare anybody to. So that's why it's really hard to be bearish dollars right now. Anyway, I can go. I gotta finish. I gotta go to the bathroom. So you guys don't need to know that, but it's early. Now we do. And I've had a lot of coffee, so gotta go. Silver trading below 24, can't break 24. $22.30 is the 127% extension. Gold can't break 1755. We're bearish while we're below those two numbers. Support for gold probably will be here. If we can get back down to 1720 today, I think it's going to find support somewhere around here. It's easier to see than silver. Bitcoin trading a little heavier, but remember 42.5 is support. Resistance is 48.3. And actually it's bullish while we're above 42.5. S&P, same numbers as it always is. But, stocks are a little heavier this morning, which have to be noted. So 44, well, I know we'll write 43.80. The top of this wedge is at 44.60, but we can make it to 44.95. It's still possible while we're above 43.75, right? While we're above there. And remember this wedge, this lower trend line of this wedge is catching up with price. That's kind of one of those things that you have to be really, really careful, really careful. That, as we are catching up to it. Euro's at lows right now, by the way. And one last thing that Filippo said, did I say his name correctly? He said that yields and the dollar have a correlation. Yeah, especially to the yen. But I think if yields go higher, I mean, Steve, what do you think? If yields rally, if U.S. Treasuries sell off and yields rally, what do you think the dollar is going to do? I'm going to ask you.
I have no idea. The two of them don't necessarily have any correlation.
I have a view.
Okay.
I think if yields rally, then risk is going to come off, which means dollar is going to go up.
Yeah, that if yields rally in a manner that spooks the market, that is very, very true. If yields rally slowly with inflation remaining very high, not necessarily the case, because it's not about nominal yields; it's about real yields.
Yeah, yeah, but still, I think that's the.
But
the
yeah,
bias.
if there is a
bias.
spike higher in the yields that spooks the market, then yes, that will stoke risk off conditions, and that at least temporarily will definitely get people jumping from several assets back to the dollar, because necessarily that's what you have to do to go back in cash.
All right, very good. All right, I'm going to pass it over to you guys. I got to roll. Good luck today.
Okay, I got it. I'm posting it. Steve, you can take the screen. I need about
already did
30 seconds to do my posting.
I'm counting, Stelio. 25.
Yeah, right. And this one.
So PPI was massive, right? Almost 8% now.
It was indeed, yes.
And core CPI above 6%. I mean,
and
yeah,
look
that
at
tells me Stelio, that the pullback in the CPI number was another just temporary oscillation.
Yeah, you'll get noise. We're at really high levels, so that like 0.1, 0.2 on a year-on-year base is a much smaller change, in terms of percentage-wise of what's expected. Anyway, you're gonna get, when we used to have PPI and CPI at 1.5%. 0.1 or 0.2 was a big deal. Now we're at 5%. 0.1, 0.2 is a smaller deal. But did you see Japanese PPY as well? That came in earlier today. 5.6% year on year.
Yeah, imagine.
So it's I mean, producers are getting squeezed everywhere. I've said this before so many times. I have friends who are ship owners, and they're telling me this thing is going to be here and it's going to continue, and the difficulties in shipping and in procuring materials and everything that you need is going to be difficult for a while. And I'm seeing these guys who are buying and ordering new ships and doing stuff like that, and they're not idiots. If they thought this is going to be over in 6 months, they wouldn't be doing any of this.
Exactly.
So I think this is here to stay. And the question
and by the way, I need to reiterate here, I've said it before, PPI, because it's not measured via government calculations, etc. so much. I mean, it's not so much skewed by measuring things the quote unquote proper way.
It's more representative, right?
Yeah, is a much more honest, representation of actual inflation than the current version of CPI that undergoes through several adjustments and calculations.
Yeah. So I think the point is inflation is going to stay high. The question then is, what do central banks do? To what extent do they tighten, or do they, taper and hike and all that? They're going to try and stay with the ahead of the curve. It's impossible to stay kind of close to the curve, but I think they're going to fail. But the bottom line is eventually we're going to get higher rates. We're going to get tighter monetary positions, which means that risk is going to come off. Now, how do you time this? That's a billion, trillion, quadrillion dollar question. So, if you've been long stocks, well done. And, taking some profits as we go higher is a really good move. But if you want to get long here, I wouldn't recommend that. I'm not saying short it, but you just
chasing up here definitely doesn't seem like the healthy decision to take, right?
Yeah, I'm not saying get in front of this train.
Even from a mean reversion perspective, right? Let's say you are super bullish. Still, I mean, isn't it about the time we get a little bit of a mean reversion?
Yeah, it's been the time for a few years. Actually, we got one in COVID, didn't we? But that lasted 3 weeks.
Yeah, indeed, less than a month. Yeah, that was impressive, given given the actual.
But unsurprisingly, today we had this big beat in the numbers. And look at the euro; it's unchanged. Look at the rest of FX. Nothing to write home about. Okay, Ozzy and Kiwi, commodity currencies are a little bit weaker, Ozzy and Kiwi, but
Ozzy got rejected once again from this little channel we were talking about.
Yes, stocks are very, flattish. It's just precious metals again that are getting slammed. which just goes again with what we've been saying for a while, that they're trading weak. And even though that, I think they're going a lot higher in the medium term, I would not be buying them here. End of story. I think, we've said this before, 1680.
Yeah, although I have to say, still your counter argument here is the following. With that spike we had Sunday night in gold lower, we tested more or less the area of previous lows. We tested this channel's descending trend line supports. And we've now built, with yesterday's candlestick, a morning star formation here. We had this massive down day, we had a doji, and yesterday we had a bullish candlestick that retraced more than half of the body of the first candlestick. So from a candlestick perspective, this can be the initial step for a turn higher. Now, admittedly, silver in comparison had nothing equivalent to show, right? So this is a divergence that looks interesting. I mean, if I had to look at silver in isolation, silver looks pretty heavy. I mean, even the last 2.5 days of price action are just showing short-term consolidation, which, points to lower prices. And I'm pretty sure, and that's also worrying, since we have this powerful confluence of supports at $23, I'm pretty sure that there is a big collection of stops below 23. So
yes.
Yeah, that increases the likelihood that next time we break through 23, there's going to be fuel to that fire, and we're going to see sustained. I mean, sustained in contrast to the few-hour move below 23 that we had on Sunday. We're going to have a more sustained move below $23.
Yep, it's very likely.
Yeah, it is. It is, and something still. You and I think the same, having to do with that. Personally, I don't care how much silver or gold move lower, because I consider it a gift horse, and you don't look a gift horse at the mouth, right?
Yeah, exactly. Yeah.
So as far as I'm concerned, they can destroy them as much as they want. The more they do, the better the buying opportunity.
I agree, and you know that very well. What else? Cryptos are a little bit lower today, but really within their daily volatility, it's almost like a flat day. But
2-3% move for cryptos is like 0.2% move for a currency.
Yeah, Bitcoin is trading around 45,000. So that's, believe it or not, we're talking about, when was it? Couple of weeks ago, about the false breakdown. Maybe 2 or 3 weeks ago, below 30K, and it's gone up 50%. So that's that just shows you the immense power and volatility of cryptos.
Yeah, the volatility in the crypto universe is unbelievable.
Yeah.
And on one hand, hodlers have a point there, in the sense that if you are a non-believer and you look at that type of moves we get to the downside, there is no way that in your right mind you're going to stay in that, right? But on the other hand, as I've said before, I think that hodlers at some point, many of them have already done so, but at some point they're going to get seriously destroyed. So yeah, it is more of a, like we had in Tesla, it is more of a cult type of belief in an asset than anything that has to do with trading. But whatever it is, if you are capable of making money trading cryptos and you can sleep at night,
well done to you. Yeah,
kudos.
Yeah, exactly. I can't.
Yeah, kudos. Really. So yeah. Okay. What else?
That's pretty much it. We didn't mention it on Facebook. We did have a UK GDP as well, came in line at 4.8% quarter-on-quarter,
more or less. Yeah.
Industrial production, manufacturing production, slight miss on one, slight beat on the other. Nothing really to write home about. So
Nothing that's going to move the market substantially. Yeah.
Yes. So Bank of Mexico today is the big one for people who trade the peso, and that's it.
Yeah. Speaking of USD MXN, and since we do have indeed potentially market moving event today, I'm still monitoring this descending triangle here, and it literally can go both ways. Now, looking at the medium term picture, the fact that we've been unable to capitalize on recent dollar strength is a worrying sign for the bulls. But on the other hand, we're still trading above the low that we found at the beginning of the year in January. So that leaves the door open for one more move higher before we can resume lower, because in my opinion, we are probably in a sustainable downtrend here as well. So, but yeah, there is the possibility of seeing higher prices. Although, given the prior trend and given this formation, I would for no reason be bullish unless we break through this triangle trend line resistance. So you can be bullish if we break above it, currently passing from more or less where we found the previous high at, what is it, 20, 25, 26, something like that. So, being long below 2025, 2026, I see no technical point in it at all. Now, you want to buy a move above it, for an extension higher, it makes sense. But until that happens, I think you need to respect the fact that short term we remain neutral, but given the prior trend, neutral means medium to long term remaining bearish, right? Because whenever you're correcting a strong move and you're unable to move in the other direction, there is a very, very good chance that you're eventually breaking in the direction of the prior trend, which was lower. Let's see if the Banxico can help the pair move significantly in one direction or the other to create a technical event. Now, I mentioned yesterday about this triangle. I mentioned again yesterday this triangle in the DXY, which we're testing once again, but we haven't managed to break above. Now, admittedly, the fact that we're just consolidating on top of resistance shows that there is a very decent chance we can break above it, in which case, as I've said, the next upside target is the area between 94.50 and 95. I think that's a good area to at least stall if we get another leg higher, if not reverse lower. But until that happens, and until we break above here, I can't blame anybody that would view this as a good risk reward opportunity to be short. Now, personally, I'm short-term neutral. Long-term, nothing has changed in my viewpoint having to do with the dollar. And during the past few days, nothing has really changed in any of the major FX pairs having to do with developments, meaning other, of course, than which we've mentioned, some days ago, the breakdown from this trend line support in the case of the EURUSD, right? We haven't seen, though, equivalent follow through, meaning a big break in the direction of the dollar, in favor of the dollar, in any of the other major currencies. So we've seen this move in the case of the euro, but nothing that so far testifies that this is a real move. In fact, Blake mentioned earlier in the F.A.C.E webinar that this looks like a bull flag, for example, in the case of the pound, and I do agree. For the time being, this looks like a bullish consolidation, which points in the opposite direction where than the euro does. Now, speaking of which, since we mentioned both of them, I have to say that euro pound has slipped below this channel. It refuses to accelerate lower, though, and still remains above the key area at 82.80. But admittedly, it does remain heavy for the time being. So I really don't see any argument for being long from where we currently are. It looks to me more likely to just produce another move to the downside, and there is room for that to happen without creating any long-term technical development that's worth mentioning. What else? There was something I wanted to mention. Yeah, having to do with crude oil. Crude oil also had a little bit like gold, had a couple of days of recovery. I'm still of the opinion that this is some kind of a corrective move. There is even a chance that we found some kind of a tradable low, although the jury is still out. There is a chance that we have to see one more low before we can actually move higher. So being in the middle of this symmetrical triangle for the time being, I would be very, very careful in trying to fade this move, and taking a position here gives you no risk reward in any direction. Now, natural gas, we have this very orderly pullback. I really don't see a reason for somebody to turn bearish here, as long as we trade above 380 roughly. I think the bullish trend is still alive and doing well. As I said before, among the metals, silver looks to be the one most in danger at the moment. Having a look at the gold-silver ratio, by the way, also gives us this breakout from this formation. I was monitoring this gold-silver ratio formation as a potential. As you see, it had clearly corrective characteristics, and it was looking like it was a matter of time for this to break lower and push lower once again after this massive move lower from all-time highs, right? We had this parabolic move higher, which was terminal. And in my opinion, there's a huge chance that we're never going to see again in our lifetime a 130 almost relationship between gold and silver, needing 130 ounces of silver to buy one ounce of gold.
Incredible that.
That was absolutely incredible. Now, the thing is that we are breaking above this formation, which opens the door for a bigger corrective move in the gold-silver ratio, which is another thing that testifies to the possibility that we haven't seen the low yet in metals, because generally, when the metals start to overperform, silver tends to do better, and you would expect the gold-silver ratio to do bad, to plunge lower, right? So yeah, I just wanted to mention that as well. Now, speaking about parabolic moves that found their inescapable fate, like the one we had here in the gold-silver ratio, there is one thing I was looking at yesterday afternoon, and we talked about, since our friend Amira, keeps asking about it, is this bust in the case of Moderna, right? We were talking about Moderna being in danger after having found, such an accelerated, path above this bullish formation. We talked about the possibility of this having some kind of a very sharp corrective move lower, because that's what happens when something goes parabolic. At some point, there is a good explanation about it. There is no magic about it. It's that at some point when a market just keeps moving in one direction non-stop, the market runs out of bulls, literally runs out of bulls. Everybody has turned bullish, and everybody, in quotes, I mean, it can't be everybody, but everybody that was interested has already bought, and everybody that has already bought as much as they wanted. And at some point, there is, a stall for any number of reasons. And once that happens, and you have a ton of people that have been long this thing and have made a lot of money, and they're holding into a big chunk of paper profits, and they realize that a market that has gone vertical has stalled, and then it's turning lower. And the first thing that comes in mind is like, oh, I'd better take profits here. I mean, I've had a good run. I've done very, very well. This thing moved a lot more than I expected. I would be very, very greedy to try to push my luck further. And then everybody runs for the door at the exact same time. And that's why you get, after vertical moves, you get counter vertical moves in the other direction, right? Now, there is a very, very good chance that this is going to be a corrective move, but that doesn't mean that it can't be a sharp, deep corrective move, right? So bottom line, since I assume for you to be asking all the time, you had a position here, I would definitely be looking to get rid of my position here and rebuy it at probably much lower prices. Let me open.
It looks like that gap needs to be filled at 250 something.
That's what I think as well, Stelio.
Mm.
That's what I think as well. There is a very, very good chance. Let me see. Blake, please. Okay. Okay. Comments about what we were talking about before, having to do with yields, etc. I see no questions, Stelio. Anybody wants to ask about something specific?
It's okay. We covered quite a few things anyway.
Yeah.
No,
okay.
I don't see any. Thank you, Alexandra.
Okay. Thank you, guys.
Thank you, everybody.
So there is a chance that you're not going to have me here tomorrow. I'm going to try to be here from another place, from a hotel, actually. The plan is to travel during FA.C.E, so I can be on the webinar from my hotel room.
Wait.
The Four Seasons, right?
Wait. Can you hear me?
Absolutely.
No.
Wait, no. Are you going on vacation?
Yeah, you know that.
Well, I wasn't sure if this was I know you had a wedding to go to, but this is vacation.
No, that's yeah.
Don't be on the webinar tomorrow. Enjoy vacation, please.
Nah, it's okay. Tomorrow it's like an intermittent day. We are, because we have Jason and he's young. We don't want to have it.
Can you please talk some sense into Steve and tell
No,
him?
I tried many times. No, I can't.
Anyhow, tomorrow we'll be
All
staying
right.
for like 2/3 of a day. We're going to be staying at Patras at a nice hotel before we actually reach our final destination, which is Corfu. So, tomorrow it's going to be more of a day of travel and relaxing a little bit before we get to our final destination. So I'll probably join in from the hotel.
Enjoy.
Okay.
Right.
Okay,
All right, guys. Thanks, everybody.
See you probably tomorrow. Bye.
Bye.